Welcome to Trading Lounge and the US indices for Tuesday, October the 4th, and starting with the S&P here. We're still looking at, from the top here, we're looking at 1 and 2. We still haven't got wave 3 in, we still don't have wave 4, and we'll look down for wave 5. And then once we have that, then from around the 35, we'll see an ABC pattern back up for wave 2. And then down for wave 3. So let's go in and have a little look at this area through here. So we're going to move into the tick charts on the 50k first, just to look at the bigger picture here. So we want to go back over where we were yesterday. We were looking for wave 4 here, and then we were looking down at 1 and 2 and 1 and 2 and looking down for wave 5 of 3. Now unfortunately that didn't happen, so we ended up with this 3-wave move here. So the best thing to do is to bring wave 4 over here and look at this as an A wave, a B wave and a C wave over here, and then down for wave 5. So we'll see this push back up. I think around the 37.30 would be sort of max on that, which would be around the 38.2% retracement level. The 35 down here is going to be a bit of a door stopper for this low here, and then wave 4 to pull back up to the wave 4 of 1 lesser degree, and then wave 5 to move down maybe to the 3400. Could go lower, will just depend on what the sentiment is at the time, and then we'll be looking at an ABC correction to the upside here. And as mentioned before, it's this wave 2 down into wave 3 that we want to capture at that point, because this leg coming down in wave 3 will be longer and stronger than wave 1 here. So that's the one that we want. Yeah, okay, let's go further in. Just before we do that, I just want to check on the volume here. So this is the SPY here. So we can see it's very typical to start seeing increased volume on the bottom of wave 3, because it's where the short covering comes in, the profit taking, it's where the corrective rallies come, it's where stops get taken out. There's a lot of volume that gets ticked over here. So this is also what we're seeing here as well. I'll just check the SPX. So let me just clean my mess up. Yeah, so basically the same thing here. I mean, that strong move that we've seen today, I mean, this is trading view, I haven't checked any other volumes, but we can see that the thing here, the market's moved up, but it's actually moved up on lower volume than the previous day. So that's important. It's a bit like this one over here. We've got that increased volume here on this big day here, but this the following day it moves up here, but it's on lower volume than the previous day. And then we're getting increasing volume here in the downtrend. So you need increasing volume for a trend, be it in any direction. But just to point out that it's we're seeing increased volume coming in where we should be seeing it coming in at the bottom of a 3rd wave, because we've got 1, 2, 3. We've still got another wave to come in here, because we've still got 1, 2, 3 here. So we've still got the other one to come in, the wave 4. But yeah, so we're seeing increased volume in the right places. We're seeing this move up overnight, but on lower volume than the previous day. So that's corrective. So yeah, corrections are on lower volume. So yeah, so that's in there. Let's just go into the go to 10k, I think, just have a look here. Okay, so this is basically, just want to shoot the breeze here for a moment on this. So we're looking at wave 3 here. Now we had wave 4 sitting over here yesterday. We just didn't get the 5 waves down. If I had 5 waves in this move here, then I would have recognized what was going on, but I didn't get those 5 waves. I only got 3 waves in here. So I don't know. I mean, of course, it's my fault, I was there, but I don't know how I would have known otherwise with this, unless that was in 5 waves. So yeah, a bit of a tricky one, but so the situation is that this is definitely in 3 waves. So that means that the takeaway here really is we know this is up on lower volume from the SPX. We know that this is corrective here. So this being a corrective pattern here makes all of this corrective, and we will see more downside. So the other point here, let's just say that I've made a mistake and we're actually in this wave 3 here, and we're going up for this wave 4 here. Then that would be from the worst case scenario would be from that top there as wave 2. When you're taking wave, wave 4, be it this wave 4 or this wave 4, you have to take it from this low and not that low. So that would bring us, taking it from the top there, would bring the 38.2% retracement level there. So that's the worst case scenario, just to let you know. And the current wave 4 here, we need to look at that. So from here roughly you can get that right down to the half point, quarter point or whatever. So this is the 38.2% retracement level here, so we're quite close to here. So okay, 7737, so 3740 probably around the max at that point, right? So this is just group 2 here, 65, 72 and 80 here. And yeah, so I'm thinking that worst case scenario got wave 3 here and we'll go higher up into wave 4. I don't think it's the case, but still you've got to be, you've got to look at these things, so yeah, but this is very clear that it's a corrective pattern. The only other way that this could be counted is by looking down here as wave 1 here, and then putting wave 2 over here. So as long as it stays under this level here, then it's possible to do that. But I don't think that's the case, because I was looking at the mid-cap 400 here, and I've taken this to the extreme of using this wave 3 and this wave 4. But what I wanted to point out is that this wave 4 has just tipped out the top here for that. So yeah, so it's probably not wave 1 and wave 2 here, but it's just good to talk about these things, I reckon. So I'll leave that at that. So we're kind of left, well, we are left with this particular pattern here, and then what we'll see is this wave 4 come back up, normally come back up to the, like that was a wave 4 here, so that was another wave 4 coming through here. So this, all the wave 4s will pretty much line up here at this point. So we can bring that down to, we can work with that particular high there. And this is a CFD product here. I just use IG markets because I like this pro real-time charting. But if you're doing E-minis or futures, or the SPY or the SPX, it can all be different prices. So the CFDs are contracts for difference, and they work on the futures market price and the index price depending on where the volume's flowing at that point. And then they've also got another calculation in there called fair value as well. So it makes it a little bit sort of tricky. Anyway, we'll see wave 5 come down here. So probably, something of this nature, something of this, like this. And then once we've got that, then we'll be looking at this will come back up for the A wave, the B wave, and then the C wave moving up here for wave 2. And then we'll just keep an eye on that. This could be the low in the market here, the absolute low in the market, and we could go up from this. I mean, could be a big bullish move up from that point. We expect it to move up anyway, but we'll be very mindful of this particular turning point here. And if this is going to be the case, then we're going to have a great trade coming down this side of it here. So look, I'll be, I don't want to be biased between particular counts unless I've got a good reason and I need to explain that. But if this is going to be a bullish count or wave 2, the structure here is going to be the same for both of them. So we won't know until it turns. There's a few things that we can do though, is that wave A is normally the sharpest. So if we see wave C getting a bit lazy here, then we'll know that it's wave 2 at that point. That's the behavior of the structure. So yeah, anyway, we'll get to that when we get to that, but it's good to talk ahead because we want to be, you need to be, this may, or let's put it this way, this may or may not happen, this big third wave coming down here. And even if it does come down, it's not that easy to trade because you get this wave 1 here, which is okay. The wave 2, comes back onto you pretty sharp, and then you've got wave 3. I mean, this wave 3 coming down here will be much longer than this wave structure here. So it's just good to think ahead of how you can survive that wave 3. How do you make the most of it down there? Is it easier to do stocks? Less leverage, all of these sorts of things, but you've got to be in it to win it, and you need to manage your exposure in all of that. Anyway, enough waffling, let's just cruise in and have a little look at this pattern a little bit closer here into 1000 ticks. Let's get a bit more. What have we got here? Load that up. It's a bit overkill. We just want this pattern here. So we've got wave 3 here. We've got this as an A and a B and a C wave for the A wave, an A and a B and a C wave here for wave B, and then we're looking up here for wave C or 4. So coming in around that old high here would be, it could be above that, could be below that, but it's just something that's probably worthwhile aiming for. And the other thing is too is these indices are pretty much sort of moving averages of stocks to a point. I mean, obviously they've got their options market and this and that, but so what I'm trying to say here is that this particular move up here, the stocks also need to move up here as well. They need to finish off a fifth wave here. So from B to C here, we've got wave 1 here with an A, B, C for wave 2. We can look at this as 1 and 2. A little bit short for the third wave, but this fifth wave doesn't look that long either, so they're probably about the same length. So we could go 1, 2, 3, 4, 5. Now I could be wrong about that, and what would happen here, this would be 1 and 2 here, then this would be 1, 2, 3, 4, 5 just for the third wave here, right? And then the fourth and fifth, so it could build on itself a bit further to the upside. We'll just see how it plays out in the Asian and European session for this, but just let you know that stocks, they need to move up a little bit higher as well. So just that's kind of got to happen in a way. So yeah, and then once that, I guess once in terms of trading the market, so obviously the money's in the turn, but it's always a little bit tricky to get. Once you see this first wave come down here, then you'll be quite, it'll be quite clear that you've got that first wave. So there'll be some sort of rally from that point, and then you can look to short the low, take the second low. There'll be 5 waves in this move here. If you can get the first 5 waves in here, this will be a fractal of that first 5 waves in here, so you may be able to get it a bit earlier. But I have to say, getting the turn can take you anywhere from, like, you can get it in the first go, there's no doubt about that, but sometimes it can take you 3 or 4 goes. So you don't want to be risking, 1% each time on the turn, because that's a bit gambling-ish at that point, you know what I mean? So if you trade 5 contracts, then just, for fun, do the turn on 1 or something, because you don't want to get flicked out. You'll have to hold it to get, to get through there again. I just want to check on this actually, now that I've brought that up. I know that 3's much longer, so that's cool. So I've probably got the right count, and then from here to here we can get a 38.2%. So this could drift all the way back here to this wave, to the previous wave 4, or 38.2%. So it can drift back at this point. It may not, but yeah, there should be some more. There should be something that you could look to call a fourth wave. It's a little bit small at this stage. This fourth wave here should be 60% bigger than this one, 50-60% bigger than this, because we're moving through time and space, and this is 1 degree higher, and it all moves. The universe expands on the golden mean or the golden ratio. So yeah, most things expand on that. Unfortunately, not my consciousness. So that's that. Let's cruise into the other dude. So we've got the NASDAQ here. So we've got the NASDAQ has been much weaker than many other markets. It's had a deeper bear market than the S&P. So, but in this case here, we'll look at it the same as well as wave A here, and then an A wave, a B wave, and a C wave here. This was a bit lower on the S&P, but higher here. That was interesting. So the A wave and ABC for the B wave, and then once again we can look at this moving to the upside here. So we can just plonk these on here. This one here looks a bit more equality with that one, but so this could drift back down to this wave 4, but I'll just put it here. It will want to try to find support on top of the 11.3. If it does get a classic trading levels pattern on here, I mean, it's probably down here, then up here. That would be about it, because the extension's in from wave 2 to wave 3. That's where the extension is, because normally out of the 5 waves, out of the 3 waves, 1, 3 and 5, one of them is going to have the extension in it. In stocks, it's normally wave 3, can be wave 1, can be wave 5, but normally it's wave 3. If that is the case, then wave 1 and wave 5 will be roughly the same in size. If this comes back to the 38.2% retracement level, then wave 1 is going to be too small. It's not going to make a new high there. So then you can just, I just normally take sort of 61.8% of this. So if I looked, that's 61.8% of the third wave, and then just stick that to the bottom there, and that's where I get that. Or what I also do is, I mean, I take wave 4 here, and then I look for 1618, but I look at these things here, but I don't get too, you can get them right down to half a point. Sometimes you get them spot on and all the rest of it, but you're better off thinking to yourself, well, those two here come in around the 400, and then when you get to the 400, you start to think of the classic trading levels pattern. What type? It's only a handful of patterns that can occur at a level, and once you understand the basic ones that I use, then there's not much variation on that, and you can kind of figure out the arrival, the reaction, the first high above the level, yada yada yada. If this after this makes a new high, once this market plays out above group 1 here, so it's 11,000, 1, 2, 3 of group 1 of 11,000, once the market's up here, right, if it comes back down and finds the number 2 here as the retested resistance here, once that becomes the retested resistance, it's not a resistance until it's made the first low, and then it takes that low out, then it's checked it, and that move up will be on lower volume. But once that number here becomes the resistance, then you can consider it being pulled down. After it's done this leg here, it will be pulled down to the 11,000 of that. So you're on. Once that becomes the resistance, you kind of know you're on your way at that point. So in this case, because of this leg, so that's all good. And the other guys, the Russell is the same. The Russell didn't come deep down here like the other market, but also just sort of nipping out the top there as well. So that's sort of not quite. I mean, the Russell and the mid caps kind of move together in a way. We've got their own sort of quite similar patterns. Anyway, an A wave, an ABC for the B wave, and the same thing occurring here as well. So up at the 17, 20, 30 area for that. So if it plays up here, and then it finds, gets up to 17, 20 or 30, somewhere up there, and then it comes back down and finds the 17 here as the resistance, well then you'll know to look for this first low below the level and short here and then short under here for that, you know, and then build back down into this. And the Dow Jones, that took out the low here, so but the same thing again, wave 3 with the A wave and ABC for the B wave here. That could be counted a bit differently, that could go there, not to worry too much though. Once again, we'll be looking for the little wave 4 here that will find support on this wave 4. It's kind of nice structure, and then push up here. How far will it go? Somewhere between this top and this other level up here for that. And that's that. So yeah, we'll stay with this count. I mean, I wouldn't turn bullish unless, you know, this level here became the support with the classic trading levels pattern to the long side. That would be the arrival, the reaction, the first high above the level, then the ABC correction, and then sitting on there, you know. So we're a long way from that. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.